Hello and welcome to VCCTV. I have with me a very special guest today, Sandeep Murthy of Lightbox Ventures. Sandeep, thank you for talking to VC Circle.
Right.
My first question to you is that you were completely associated with Sherpalo. People knew about Sherpalo and it came with a lot of bang with KPCB. Almost all the investments were together. And now we see and talk about Lightbox Ventures. So what is the entire rationale behind dismantling Sherpalo, if one might say, or one look at that? And the entire rationale behind floating Lightbox Ventures?
Yeah, sure. So I think if you go back to the beginning, the start of it was 9 years ago. Came to India with this idea that we wanted to build consumer tech companies. And there have actually been some great articles written by various people. Bill Gurley wrote one in Benchmark saying that it takes 7 years to learn how to be a VC. And I think, quite honestly for me, I moved to India, very new to the venture world, new to India, and had a chance to work with Ram, who's been fantastic to work with, and Kleiner, who's been an institution building lots of great companies. And I think over the last 9 years, we've really understood the Indian market. We've understood what works, we've understood the approaches that have benefited us, the situations that haven't been as useful. We've been able to build companies like ClearTrip, like InMobi, like GreenDust. We've had a chance to really explore it all, see it all, build it up. And I think we did it in a very collaborative manner, and things worked well. I think at some point though, things have to evolve and move forward. I think we were talking a little earlier about keep moving, keep changing, keep evolving, and I think this is no different. And Kleiner hit a point where they said they wanted to focus on the markets where they have interests and where they have partners, specifically on the ground.
Which is the US market.
Which is the US market. So that became their sort of desire and interest. And Ram felt that, look, we entered the market along with Kleiner, and this was the step that they felt was the right step, and that was right for him also to then explore what made sense that way for him also. And for us, I think I hit a point where after 9 years, or when we started this discussion, it was actually 2 years ago, after 7 years at that time of having looked at the market and the opportunity, and we understood what we wanted to do. We understood the types of companies we wanted to build, we understood the approach we wanted to take, and we felt that it was the right time to sort of build a business for the market. And so that's when the idea of Lightbox came together, that's when the partners came together. We have 4 other partners in the firm, we have a broader team that's there to help support the companies we work with. And so I'd say it was the convergence of the right set of things at the right time.
Talking about Lightbox Ventures, how do you think it's different from other accelerators, startup ventures?
I guess it's best for me to tell you sort of what our underlying philosophies and thoughts are, and see how they compare. And I think that the market opportunity in front of us is large, and so this is not a. It's interesting. I went on a non-deal roadshow a while back for ClearTrip, and we went and met lots of public market investors, and I love. I was telling you before, I love these interactions because you learn a lot from conversations. And from one of those conversations, someone said to me, look, if we're talking about market share in the travel world at that time, we're talking about the wrong thing. This is a growing market. It's about your growth rates. It's not about who owns this much and who doesn't own this much. Everybody should just be growing rapidly. And I thought that made a lot of sense because at the stage that we're at in the market, it's all about growing multiple companies. So the market, as far as I'm concerned in India right now, is at that same stage. We have a handful of venture firms focused on the early stage opportunity. There are not hundreds of thousands of them. And quite honestly, I think the opportunities in this country are phenomenal, and they're large, and they're disparate. And I think we're going to see great inflection, and when that inflection comes, we're going to see a lot of value get created. Coming back to your question, so what's different? Look, the lessons we learned over the last 7 years kind of break into a couple of buckets. We will invest early and go in a very small number of companies. The reason for that is that we're going to be very operational in our approach with these businesses. We're not one to be a hands-off investor. I think again, if I go back to some of my early learnings and my interactions with Ram, we first invested in ClearTrip. One of the comments we made, and one of the comments he said at that time was, look, our future success is based on how well this company does. It's our first investment, we're building it from the ground up, we need to make sure it works. And I thought that was really interesting to kind of set the tone for what we're going to do. At Lightbox, it's the same idea. Every company is a reflection of who we are as people, which means that there's no task we won't do. So at ClearTrip at the early days, I actually was involved in digital marketing.
So you ran the company for 2
Well, I got to that eventually. So actually, if you think about what happened, we invested money. My first job at ClearTrip was digital marketing manager. Today, one of the guys at ClearTrip who has to hire for digital marketing when anyone interviewing for that position asks, you know, what's my career progression look like here? So look, the last guy that held it ended up becoming chairman. So, you know, I think it's that mentality. Today, you know, one of our partners is sitting in one of our other companies today, operationally very involved, basically reporting to the COO on a certain functional area. And we're absolutely comfortable with that. And I think that we know and we like that aspect of business. I think investing is just the way by which we get to play the game of building a company. So invest early, get very operationally involved, and focus on tech and data. The early days of InMobi. Before we raised Series B, I remember I was sitting with Naveen one day and we had this discussion and we looked at it and we said 90% of the company was in product and tech. And you know, that was it. We were burning a lot, we'd hired a lot of people, but the philosophy was unless our product and tech was strong enough, we wouldn't be able to compete with the people that would eventually come into this market. We hadn't yet even gotten to the point of saying we were going out after the rest of the world. We basically said, look, we have to build a fantastic platform because if we see this market opportunity, everybody else is going to see this market opportunity. So we need to be able to actually compete and differentiate based on our product, not just based on our marketing or our spend or anything. The takeaway from this is that we will have 8 companies in our fund. It's going to be a $90 million fund. We're not going to have a large portfolio because we can't be deep. One of our recognitions is if you want to get involved at the level we want to get involved at, then we can't do that in too many businesses. Equally, we're saying that we're investing in our ability to help build those businesses. So when we meet an entrepreneur, our thought is really, okay, they can do these things, we can do these things, and together we can build this opportunity. We're not looking at it and saying, can they do the whole thing? And so given that, we're very happy to invest in ourselves behind this. And look, we're gonna sink or swim, so to speak, with this philosophy. And you think about it, if you're an entrepreneur building your company, especially at the Series A stage, you are more likely than not, it's you, maybe a few other people as co-founders. You're sitting there, you're trying to figure out the world, and knowing that somebody else has that much invested, that their future is equally tied to your future, you'll find those opportunities.
But you know how involved is Ram Shriram in Lightbox Ventures?
So Ram is not. So just, I mean, so Ram
has nothing to do with Lightbox.
Ram has nothing to do with Lightbox. Ram is going to continue to run Sherpalo. Sherpalo is his fund, his money. He'll continue to be involved.
But you aren't involved in Sherpalo.
And I'm not involved in Sherpalo. We've had a great relationship. We've had a great partnership. I'm very thankful to having worked with him. And so we're making the transition. And Ram will continue to evaluate opportunities in India, and hopefully, you know, we'll look at things together in the future, and that will be great. But Ram is very much continuing to manage Sherpalo, and I'm now building Lightbox.
Okay, talking about $90 million fundraise, how much of that you've already raised?
We've raised $25 million.
And can you just give us a profile of the LPs?
It's a large global institutional LP. So they're people that have been around this business for a long time, and they know a lot of what they're doing, and we're very happy to have them.
Okay, so when do you plan to have your first close?
We've done our first close.
$25 million. And you're looking to raise money from international, only offshore fund?
You know, we'll consider domestic capital as well. It has its challenges, but we're definitely keen to. I think there's a lot of value in it. It's really unfortunate when I look at this. I've had conversations with a lot of domestic LPs, and it's unfortunate that they are not able to participate in the tech growth because of the way funds have been structured, and people want the flexibility to be able to eventually, as the companies expand globally, they tend to move offshore for different reasons, and so it makes it complicated. Now, ideally, we can solve for those, and ideally, I'd love to have more domestic investors, just because I think they'll add value, quite honestly. There's people that
how would a domestic investor add value to a technology company which ideally wants to be global?
Absolutely. The market starts in India for us. So think about any of our businesses that have expanded. We've got 3 companies that are already operating in multiple countries, and a 4th that's on its way to doing that. But they all started, so ZoomIn. ZoomIn is already doing it. GreenDust is actually on its way to doing it as well. So that same model of reverse supply chain, we're actually expanding globally. But they all started, even InMobi started from the premise that there's a large domestic base. So you think about India as a market opportunity. What's interesting is the Indian market opportunity provides for scale, first and foremost. When you build a business in India, you are inherently looking to address let's say 200 million people. In the case of mobile, when we started within Mobi, 400 million people. I was at an event last night where Deepak Park spoke and he said by 2030, their numbers say that the middle class will be 800 million people. So I mean, you're building for scale. So as a result of that, expanding to the next adjacent market, no adjacent market is as big as this. The next adjacent market is China, that's as big as this, but everything else, you've already probably accounted for scale in some way. Second, because you're in India, you're generally operating with a lower ARPU. Your revenue per user, just per capita income's lower, everything's lower, so because of that, you tend to have to build more cost efficiently. So there again, when you look to expand, you have hopefully a cost advantage as you look at other markets. This is playing out for ZoomIn very well. We built our entire infrastructure for photo prints and photo books in India. As we look to expand, the single biggest variable cost item in all of this is actually people cost. And we have a significant advantage out of that. So as we look at other markets, we're in a very good position. We can sell in most markets 20% cheaper than anybody else. The third aspect of it is tech. Everything we invest in is technology driven. So what we invest in is technology driven, that gives us immediate leverage. So when we took ClearTrip to the Middle East and expanded from India, we didn't have to rebuild the platform. We simply expanded, and we didn't have to reinvest the millions of dollars that we put into the system in the first place. We simply changed the currency. Domestic LPs, they have to see this coming, and if they don't, once we have a conversation, they usually get that this is plausible. They may not want to believe it.
But is it like an easy sell or difficult sell to these guys?
No, I don't think it's hard. A lot of that, most
Who
people
are you targeting? What kind of domestic LP? Is it like semi-institutional, retail,
So let me be honest. Our majority of our focus is not domestic LPs. So we're talking to handfuls of people, but they are very much people that, like I said, could add value. People that understand these distribution chains. So they tend to be more individuals. So it's not that I don't even know how many institutions per se exist in.
Something like Nami's Sherpalo or Lightbox Ventures.
So he gets it absolutely, right? He's doing it on his own right now. Yeah. So people like that, people that. And people whose businesses may be impacted going forward by these things.
So unlike venture funds who technically employ this, spray and pray approach, you have more focused approach towards the portfolio companies. But what happens to risk then? I mean, aren't you taking like more risk?
Absolutely, we're taking huge amounts of risk. I mean, but that's the point. Isn't the entrepreneur taking a huge amount of risk by starting a business?
But why you as a fund who has to return capital back to your LPs only focusing on like 8 to 9 companies?
It's a lot more risk. But let's look at it. The average venture fund. Forget the outliers. The average venture fund, and if you look up the National Venture Capital Association, they have a report that do also. Roughly, the average is terrible. The average sucks, right? So the average, let's say, it's around 5% IRRs. It's not exciting. You're not investing for the average. So if the average is no good, you can either hope that you're different from the average by investing the same way that the average does, and hope that you're just slightly better at it. Or you try to go about it differently. And our reason for going about it differently is not out of a hope and a prayer. This is how it's worked for the last 9 years. We've invested in 10 companies over the last 9 years. We have done very well across them. I mean, I think you guys listed unicorns in one of your articles. 2 of our companies are on that list. A third is on its way to being on that list, in my opinion. We'll give it a little more time. GreenDust. That's out of 10 companies. So out of 10 companies, I can tell you 2 are on our list already, on your list, so that's 20%. Third will get there in the next, let's say, 3 years, that's 30%. Probably a fourth, maybe through ClearTrip over time, will get there as well, so that could be 40%. So the model makes sense, it works. Deep engagement, deep involvement, and the reason why it works, so first of all, the answer to your question is, yes, we're taking more risk, yes, we're taking much more concentrated, but we're also signing up to make that work. We're not saying we're money managers. I'm not a money manager. We're not in the finance industry.
But you're also exposing your LPs to this kind of risk.
So we're very clear with our LPs. I mean, LPs, we're not telling them that we're doing 16 companies. We're telling them we're going to do 8 companies. We're going to do 8 companies. We're going to build 8 businesses. And if you believe that this philosophy works, we would love to have you as our investors. See, look, we're doing this for the next 30 years. I can't pull a fast one on someone and say, I was going to do this, but now I changed my mind. We're going to do this. This is our philosophy. This is what we think we're best at. It may not be the right thing for everybody. Other people might be fantastic at finding 16 companies, playing the distribution correctly, and building great value. I have no doubt that that's a strategy that will work for people. I know what we're good at. We're good at, and what we get excited about is, I sit here every day and I think, hey, wouldn't it be really cool if we did this? And then you get to dream that up, and then you get to think about building it, and then you get to find someone who's thinking the same way. Then you get to spend some time. So yeah, and I think that generates returns. Not I think, it has generated returns.
Okay, but how do you make sure that these 8 or 9 companies are all home run?
Yeah, so I should talk to you about our team. So we have 2 other partners here in India, and we have 2 partners in the US. Our 2 partners in India, one of them is based in Delhi, his name is Sid Talwar. Sid and I have known each other actually from high school. And so we have a tight relationship. One of the things I think is really important in any founding team is depth of the relationship and trust that exists among the team. So he and I have known each other for a long time. He has been a successful entrepreneur in his own right. He built a training services company called Evolve. He saw the market opportunity back in, I'd say, 2002, 2003. He was training tons of people to the organized services industry. He then sold that business to NIIT and helped NIIT build that regionally and scaled it up to a point where he was training 50,000 people around the region, and then realized he wanted to get back into the early stage world. And so he's on our team. Prashant Mehta, who used to be the CEO of Comely, has joined us as well. He's got great experience in the digital media space from Yahoo in his days of kind of building that up in the region. He then moved from there, came to Comely when it was very small as a business, grew it I think about 50x over the years he was there, expanded into 10 markets, been through acquisitions, divestments, all sorts of things. So he brings a different element of focus to the business. Our 2 partners in the US are Jeremy Weniker. Jeremy is a corporate lawyer by training. He's been around the tech space, consumer tech space, probably for the last 18 years. He started a company back in '97 that was bought by Netscape. Once Netscape bought the company, I'd say 4 months later, AOL bought Netscape. Then he found himself in charge of worldwide search at AOL. He had to figure out a search product. He went and met 2 guys who were at Stanford, Larry and Sergey, and said, hey, this sounds interesting. And he licensed Google. So he did the first biz dev deal between Google and AOL and brought Google in as a search product for AOL. They all got along well. He ended up joining Google as one of the first corporate development employees, actually the first corporate development employee, and built up Google's corp dev sort of network globally. He did their investment in Baidu in China. He and I have known each other because I started my life at Credit Suisse in the Bay Area. And I used to have an idea a day, and I knew his girlfriend at the time, and she said, hey, you should really talk to Jeremy. He's an entrepreneur, he knows something I met. He's been to India, he's been to my wedding, he's an angel investor in ClearTrip. So he's been looking at this market for the last 9 years with me. Sunny's our other partner in the US. Sunny is the CEO of ZoomIn. And he kind of epitomizes the nature of the way we work. He's been around the consumer tech space for the last 20 years. He started at Infonautics. He left Infonautics along with Josh Kopelman, who's running First Round Capital. The 2 of them left, they started Half.com. They sold Half.com 11 months after they started. I mean, first of all, that's really cool. You start a business, you showed such traction in an 11-month period, and you talked about the numbers from the business at that time. The scale it was operating at within the first 11 months is phenomenal. I mean, some of our businesses still aren't at that in India today. So anyways, they sold it, did very well on that. He then spent some time at eBay, grew half for eBay. Then he angel invested in Zoom. He liked the business so much, that he said, listen, I think I want to get involved in this. So he moved to India, spent time with the company. Spent so much time with the company, he said, look, I really like this. And eventually they all agreed that he'd be a great CEO. So he took over the role as CEO, and he's been building that business. And today, we're expanding the footprint of that business into multiple markets and doing it. So coming back to your question, how are you going to support it? Look at this team. We've got a team of principals that all have fantastic operating backgrounds. You've met Nitin. He's been in operations at EverFi. He's kind of been through the process of a startup, growing it, before that NEA, before that UBS. He knows this tech world. Krishna's been with us for the last 3 years. He's been supporting companies like GreenDust, Kotak Urja, Paymate. He's been around our companies for a while. He tried and failed at a startup. He's been through that experience.
Interesting. Talking about your portfolio companies, I think take us through like in Mobi, what's next for UP in terms of like a liquidity event? When is the IPO happening?
No, so look, I mean, obviously, I'd rather you spend more time asking them this question, but I'll tell you that.
And how much do you hold in Mobi as of now?
So as Lightbox, nothing. So we're not shareholders of it. So that is not part of the portfolio that came over, so we're not managing that. So we've taken over 6 companies. So 6 companies, 6 of the companies. In Mobi is the one company we didn't take over.
Well, that's like the best asset.
Well, it's also one of the hardest ones to actually come to agreement on how you would take it over, right? So it's a company where, I want to take a step back and explain again the motivations for why we did this whole deal. Kleiner and Ram wanted to focus on things in their markets, where they are primarily. When you look at these companies that we had in India, the question was, what are we going to do about that? They're
but how would you let go of immobility?
No, personally. So not personally. It's a challenge. It's a hard thing. Look, I haven't let go. I mean, Naveen and I are great friends. We'll keep talking. I'll stay engaged. I'll help out everywhere we can. But look, I think he's on a great trajectory. These businesses have matured. You also got to look at what excites me. I'm very happy for Immobi and what they've achieved. But at this point in time, they've got so many great resources around the business and so many good people that can help them that, incrementally, sure, I can be helpful because I have context. I think one of the most valuable things is I have a lot of historical context of how the business has been built. So therefore, it's great to chat with Naveen about those things, and I'm happy to be a sort of ongoing friend and confidant in any way that he'd like. And we do that. But the reality is they're all grown up, so to speak, and they're great. And I'm sure you'll see lots of phenomenal things from them moving ahead. I'll tell you the hardest thing for me to do. We sold our position in InfoEdge. We invested in 2006. We sold in 2010. The first time you sell, I think, is the hardest thing because you're so ready. I mean, Sanjeev's been amazing. Sanjeev was such a great friend to begin with, and still is. But when we were getting started in this market, it was amazing. I learned so much from their experiences. We kind of thought, and then suddenly you realize at some point you have to make a portfolio decision, and you say, all right, well, look, the right answer for us is to exit at this stage, which means that you're going to step back, and not that you don't like each other anymore. Vision or my job or my life or my passion is taking the next one from here to there, and then you leave and you move on. And so I've done that now. I've done that a few times, and it's all right. It's good, and you learn from the next set of companies. And ideally, actually, what happens is these guys are fantastic mentors and resources to help our next set of businesses. And if I just stay with one company,
potential LP also.
Yeah, absolutely. Absolutely. We have these discussions all the time.
So which are the 6 companies that you have taken in Lightbox?
GreenDust, ZoomIn, Paymate, MapmyIndia, FutureBazaar, and Kotak Urja.
So can you just take us through each of these companies in terms of what next? Briefly.
Sure. No, each one has its own long story, and I don't think I'd be doing any of them enough service in terms of trying to talk about it here, but I'll give you a sense of sort of what's interesting about them. So GreenDust, I think we talked a little bit about they're a profitable e-commerce business today. They focus on selling refurbished products.
Any further fundraise happening with GreenDust?
We will always be raising money for all of our businesses. That's the unfortunate truth. And whether that's from the standpoint of raising money for the company or raising money because as a financial investor we have to exit. So I would put it this way, that we're always on the lookout to find the right partners to help grow the business, find the right investors. Today there's no immediate fundraise, there's nothing immediately going on, but yeah, absolutely, we're always raising money. So you have a sense of GreenDust now. ZoomIn, photos, photo prints, photo books. The real crux of this business, though, is driven off of mobile. We launched an app in India called Photo Prints. It's done amazingly well. So today, the old model of photo prints was upload from your computer, choose your prints, get your prints done, get your photo book done. Forget it. Everything's moving to mobile. We've got a mobile app for prints called Photo Prints. It's Android. We see our retention rate, our number of orders, our cost of acquisition dropping, retention rate increasing, number of orders increasing. So all of this is proving out really well. And I don't know if you see, there's a photo that's always shown. 2005 when the Pope was inducted, and then 2012 when the new Pope came in. The picture of everyone in 2005 was just the heads back of heads. 2012 it's all these cameras and camera phones and iPads and tablets, and so that's the change. Everyone's got a mobile device where they're capturing images. So basically through that mobile device we're going to enable photo books, prints, everything like that. The other thing we're doing is really expanding internationally. So we're taking our same platform where we're enabling prints and photo books and GIFs and everything, and enabling it in multiple markets. And I think that's that's going to be a huge driver of growth for us. There again, we're not raising immediately, but we will, and we'll talk about that over time. MapmyIndia, it's the definitive source of data. I think it's been exciting that we've been able to compile all this information. Quite honestly, the market's going through a change. We've had 3 lines of businesses there. Personal navigation devices, the boxes that you put in your car and you get a navigation device from, or navigation instructions from. We've had that same data that we license to auto manufacturers, licensed to mobile carriers. And then you've got sort of web apps and mobile apps that we're building. We're definitively going through a transition more towards a web app and mobile apps world, and I think in the coming year you'll see a multitude of products come out from the company. And I think so as part of that, we actually are considering varying financing options. So that's something that might be interesting for your viewers to consider.
So how much are you looking to raise for that?
We haven't decided. So we are very clear that there could be interesting people that can be beneficial to kind of help grow that business. FutureBazaar. FutureBazaar has been the online arm of Future Group. I'd say we've got work to do there in the sense of leveraging the back-end infrastructure. The context of that investment years ago was you have Amazon.com and you have Walmart.com. And the idea was, let's be Walmart.com. Let's leverage the infrastructure, the buying capability, the scales, the customer insights, that the offline presence of a group like Future Group. I talked before, 94% of retail is fragmented, 6% is organized. These guys are large in that organized segment. Being large in that organized segment, you get lots of insights. Kishore has built a fantastic business there. He's got a great team of people that actually mine the data for insights. If we can leverage those insights effectively and reduce... So in distribution businesses, there are three things that you can compete on. Your cost of acquisition, your cost of fulfillment, and your retention rate. So if you can reduce these by data and insight, I think you can do an amazing job of competing and deliver that value to the customer. We haven't figured it out yet, quite honestly. And so now that I think we're re-energized, we have a new platform, we have a new team, we've got more resources to go against it. We want to support that endeavor, and we'll figure out the right answer with that. Paymate. Paymate's really cool. So first of all, I think we've underplayed Paymate for the longest time, and it's been a mix of reasons perhaps, but we're processing close to $800 million in annual transaction value today. If you look at it, I think Square is processing about 20 billion. So we're about 1/20th the size of Square today. And we're doing a huge amount of volume. And I think based on that now, we built, again, a profitable business. I mean, no one ever realized it's a profitable company. We got a profitable mobile payment processing business. And now we're saying, okay, how do we invest our profits in expanding into other areas? So we've kind of built this company under the radar, and I'm very excited about where we can take it from here. The last one is Kotak Urja. Kotak Urja is a little bit different from the rest. It's in the solar energy space. Solar is a necessity in this country. It's not even an option.
Interesting. So are each of these companies market leaders in their own space?
Yeah, so I think that they are getting there, I'd say. So FutureBazaar clearly is not. We'll figure it out.
But it's Paymate.
So I think Paymate is at this point. I mean, there's very little data on what's going on in the mobile payment world, but
it's
as far as
definitely number one.
Yeah. So again, when you look at multi-channel products, I can say yes. So the short answer is yes. I believe many of these guys are, let's say, in the top 3 in their markets. Now, the reason why I'm hesitant.
But is it important to be the number one?
No, not yet. Not yet. I mean, I think it's important to get there. I think if you're a distribution business, getting to scale and becoming that large guy is very important. You cannot be a subscale distribution company. So you can't be subscale as FutureBazaar. The reason why I'm okay with FutureBazaar at this point is because Future Group is at such scale. So we've already solved for scale. You just need to solve for channel. And so that's the real dilemma there.
But how come ClearTrip always remain number 2?
Yeah, because we do things differently. Think about it. We've not gone after the offline opportunity at all. We've not gone into other markets at all. We don't do packages offline.
We lost that opportunity.
We didn't go after that opportunity. So we lost it, we gave it up. We didn't want to do it. Look, we're very clear about what we think will add value and what we think will differentiate us. Unless it's leverageable with technology or data, we're not doing it.
But isn't the aim to be number 1?
The aim to be is number 1 within your focus area. If I go offline and set up 10 stores tomorrow for ClearTrip, when our 70 million mobile subscribers go from 70 to 400 million, I get no leverage out of the fact that I have 10 stores. If I have the best mobile app experience out there, when 70 million grows to 400 million, customers are going to love the experience that we provide. They're going to stay with us and they're going to grow with us. You look at our focus today, we're driving a ton of attention on driving people into our mobile world because we believe we're going to differentiate and grow based on that.
Okay, like we're talking about ClearTrip, there's a recent report that Concur has increased its stake and Sherpalo has exited completely.
Yeah.
Did you talk about that?
So that's accurate. Yeah, I mean, look, it's been a great company. I'm still on the board. I'm so excited about the business. Stuart's the CEO.
So how much did you make?
So we're not talking about any of the numbers with it, but it's been a great investment. I think that the business has tremendous upside going forward. I think it fit more within this whole restructure of everything. That
so you made like 3x, 4x.
So we're not talking about it, but
upwards of 3x.
We're talking about it.
So what is going to be the immediate focus at Lightbox? To have the existing portfolio companies or invest into new companies?
Like all answers, both. We're going to do everything. I mean, look, we have 6 companies that we're really excited about.
$25 million fresh capital to invest in.
And we're dreaming about ideas to build, and we're talking to entrepreneurs regularly, and we're trying to find the thing that we can align our passions around. And so, we'll continue to do that.
So would you like further invest into these companies like GreenDust, existing portfolio companies?
We may, yeah.
For the same fund? Like
from our first fund. We have 2 funds. Fund 1 is picked up the positions in our 6 companies, and we have some reserve to invest in our businesses from that. And Fund 2 is to invest in new businesses.
And how much is that reserve?
It's enough. We're not talking about it, but we have capital to invest.
Interesting. I think towards the end of the conversation, what like 3 or 4 key lessons that you have learned?
The learnings are, like, if you're in it, you got to be committed, and you got to decide that you're sticking with it, and you got to go through the pain. And when you get through it on the other end, it's that much, you appreciate it that much more. And so, be sure that you have that conviction in what you're doing, and spend a lot of time to be clear about that conviction. I think that's been really valuable. I think having support is really important. Having people that you work with, and a team that really believes in what you're doing and can really make that happen. I mean, look, this has been entirely a team effort over the last 18 months to make this happen, and I think that's key. Like, make sure you surround yourself with people that are really smart. In my case, smarter than me, and make sure that they help you get there.
Thank you, Sandeep. Thank you for talking to us.
All right.